Okay, I think we're live.
I think so.
All right. Okay. Well, welcome everyone. I see that more people are joining. It's great to have you all joining us, and thank you so much for spending a few minutes with us with Mastercard and FinConecta. Well, one of our goals as partners is to support our clients with new ideas and new ways of monetizing and increase growth and potentially build new solutions and being able to leverage all the technology that is out there and as well of the different platforms that you guys as financial institutions or fintechs have. So thank you again, everyone, for joining, and thank you, Mastercard, for partnering with us to build this amazing ecosystem that I'm sure that it's going to be extremely successful in the future. So, Amy, if we can show a few slides that we have for the audience. Awesome. Yeah, but let's put the first one, not the last one. All right. So, okay. So once again, thank you. And the conversation today is going to be about open banking, open finance, open economy, and everything in between. Meaning, how can we leverage all the different technologies and different business models that we have out there. Everything started with open banking, then that grew to what everyone knows as open finance, which means not just open solutions for banking, but also for any financial institution in the market, and that to make it even bigger, which is an open economy ecosystem. And basically, when we see partnerships between financial institutions and fintechs in the world, there's two ways that this goes usually live. One is innovating, meaning that financial institutions leverage what fintechs have built in order to offer better services, better products, digital businesses to their clients. And on the other side, there's also a way of monetizing different infrastructure that financial institutions have through fintechs that are exposing their own services, leveraging what the financial institution has already built or have in place. When we think of those two models, there's a big component to all of that, which is integration. And usually, integration happens the way you can see it on the left hand side of the screen, which is a traditional model of integrating each fintech on a one on one basis to financial institutions. What we do and what the partnership with MasterCard means is offer you the ability to integrate financial institutions only once to Mastercard's fintech as a service platform, and through that have the ability to have fintechs that connect only once to the platform, and also for financial institutions to launch their own developer portal to be able to monetize. And the good thing is that today we have a client of ours, Lafise, represented by Graham, that's going to tell us more about what they have done on this space of monetization. So basically, what we want to talk about is how can we be more efficient, and instead of integrating one-on-one, can we move to a much more sophisticated and efficient model, such as the one we see on the right-hand side. So the technology itself that we are talking about has multiple components. One is a digital store where you can find multiple solutions that can serve multiple purposes, as we said. Then also the ability to test within the platform, the ability to also connect the different participants through the API gateway, and all of that integrated to financial institutions and fintechs. We're going to go on more detail on use case and how this works. But before that, I think it's important that we get a much bigger picture of what this means in the world. And for that, I'm going to pass the mic to Michael Clark with MasterCard, who's going to share with us some general thoughts that I'm sure you're going to find extremely important and useful. So, Michael, it's all yours. And Amy, if you can share the screens for Mike. Thank you,
Lovely.
everyone.
Thanks, Roy. It's really appreciated. So thanks, everybody. And just to reiterate, fantastic to have you all here today. Before we get into technology, I thought it'd be useful to ask a compelling question around, should you really compete in open banking and what does it mean? I think every good story has an origin. And we're going to give you a little bit of a story today in terms of what that origin is, but also what it means, and why some of the things that we're going to talk about today are so critical to be seen to be taking advantage of those things. So if we can skip to the next slide. These are some of the topics that we're going to talk about. So we're going to cover off, what is that open banking perspective, and why should you actually care? What does this mean for digital transformation? And ultimately, for anybody on the line who's thinking about competing in open banking, how do you participate in this new model? And ultimately, how do you win? That's the key for everyone involved. Okay, if we go to the next slide, please, Emmy. The next one. Here we go. So open banking perspective. I think it won't surprise you that open banking now is very much a boardroom conversation. In its origins, it was very much a niche born out of the UK. What we see today when we look at a global macro lens, the customer experience is at the heart of that. And I would also argue probably the developer experience as well. A number of facets are tensions for organizations today, particularly when we start to think about regulatory pressure, the importance of digital identity, but also some of the security aspects as well, and specifically as data becomes more prevalent in this space. So again, it's now becoming a very much top of mind for senior executives around the world. If we look at some key data on the next slide, I think it's important. These numbers are, these are up to date now, and they are frighteningly large. If we think about February 2021, in the UK market alone, that's up to sort of 860 plus million API calls. A market prediction around by 2026 of 116 billion globally. And we know today there's around 4.5 million UK consumers and businesses using open banking. So this is no longer a regulatory concern. This is now something that's being widely adopted. But the bigger question is sort of, why did this come about? So if we go up to the next slide, it's important to we can't underestimate that customer behavior has changed. The demand for always-on services, the need for a seamless digital experience, a desire for trusted relationships and more social collaboration. On the flip side, for the financial service institutions, for the customer, the access to products varied. We found, channel silos were common as consumers. Limited competition for a consumer to choose from even. And also then there was limitations between certain products. So all of these things created barriers to entry for consumers, but also new fintechs, making it very complex and difficult to enter the market. If we pop to our next slide, what's interesting is the catalyst, I've always found this fascinating, is that the catalyst for change came from an unlikely source, in this case, the regulator. So we saw disruption coming from the PSD2 narrative. We saw the CMA initiating the CMA 9 order, and also other elements coming from fintech pressures. All of that combined gave us the ability as consumers to have more choice. It made it easier for market entrants, whilst also giving extra layers of security and transparency. So a significant market disruption starting around about 2017. I had the privilege to be involved in it in its early days, forced into existence then in 2018. And now I feel old. Okay, if we pop to the next slide. So what is open banking at its core? So this is as simpler as you're going to get as a viewer. There are many viewpoints of open banking, but ultimately it's about giving access to your data to a third party, either be it them being able to initiate a payment on your behalf or give you access to your account information through an aggregated form of API. There are many different ways to connect to this. We've seen around the world, intermediaries acting as a middleman between that third party, making it easy for them. But ultimately, it comes down to the consumer giving their consent to make those initiations happen, which was the big change. If we pop to the next slide, please, Amy. And this is also interesting when we think about what the regulator chose to do. One of the key fuels for this regulation was APIs. Now, some may say that's a bold move, but the reality is they were already part of our lives as consumers and they were already familiar. We just never really thought about it. Whenever you're using Expedia or whenever you're going somewhere and you're looking at Google Maps, or even some of us, or if not all of us, probably will admit that we have a neobanking app on our mobile device. Most of those are powered through APIs. So it made logical sense for the regulator to make that the vehicle to make open banking a reality. And if we pop to the next slide, Amy. So as I said, 2017 was when all of this started rumblings, and then we started to see it in the UK in 2018. So very much that genesis moment where 9 banks were brought together and financial institutions to shape what we now know as open banking. Now, if we fast forward to the next slide, the world looks a very different place today. The open banking is now a global phenomenon. What's interesting when we look across the globe is that markets are now choosing to participate in open banking when they're not forced to. There's a clear recognition around the world that open banking is a new way of reaching your customers and remaining competitive in a very busy market, particularly as financial services start to expand in terms of their offerings into other adjacent industries. So what is clear is what happened in 2018 was literally just the beginning. And what we're seeing now, to be honest, is just the tip of the iceberg. If we go back to Jorge's original slide, we are very quickly in a short space of time in other markets, and we see in a second, other countries have decided that actually the UK model could be expanded upon, which is why we start to see terms like open finance and ultimately the path to open data. So if we pop to the next slide, please. And this just reiterates that message. So if we look at, there are 3 flavors of what we know to be open banking or in its shape or form around the world emerging. We see the typical traditional model, which we see in the UK and other markets around Europe. Then we also start to see the emergence of open finance, where other markets have chosen to push the envelope that little bit more. So we see Brazil, for example, opening up wealth data and pension data, giving a much richer set of data. And then we go to the extreme. So we go to Australia, where they are really pushing boundaries and starting to lever into that world of open data, where we're all eventually going to be, where we'll be able to have that 360 degree of our financial life, but ultimately it will also include our health life. It may include our utility life, as well as our financial data. We pop to the next slide, please. Brilliant. So when we think about all of that, what are the business models that we see across the globe? Well, clearly there are 4. The first one I wouldn't recommend to anyone. The first option is you can just comply. Well, clearly we probably all would recognize that there's an opportunity at stake here, but also an element of the business that we need to protect. So clearly compliance, and just doing so you could do, but we probably wouldn't recommend. The most first option for you to compete is you yourself become a third party. Now we've seen organizations around the world like Yolt, which is part of ING, rebadge themselves and launch themselves as a rebranded third party to offer open banking services. What we are going to talk to you about today is bank as a service or marketplace as a service, which is where the bank effectively starts to expose services for others and acts as a distribution channel. The other one, which is more far-reaching, is bank as an enabler. So this is where we start to see much more white labeling of ecosystems and much more of a sort of factory type model. We see marketplaces like Starling emerging and other players in this space. And again, FinConecta have a place here as well. So there are many more models that are emerging, particularly when we start to think about blockchain and DeFi and other things like that. But from an open banking lens, these are specifically the 4 that we see today. And 3 and 4 will be the ones that we'll be touching on later in the story. So we pop to the next slide. So why should you actually care? We've told you all the story where it came from, but I think it's important to sort of level set and say, well, why is this so important? So if we pop to the next slide, use cases. So why should you care? So if we think about the early days of open banking, there were some obvious use cases started to emerge, and I'm guilty of some of those in terms of my previous work. We saw credit decisioning, greater credit data to improve decisioning for customers. We saw improved financial management, which was the early stages of most of the CMA9, which is around PFM applications. The ability to compare products and services to get a better deal as a consumer. Enhanced KYC and verification due to the extra data. And an area which I'm quite passionate about is the area of small business. I think small business is a huge vertical for open banking, particularly when we start to think about liquidity management and forecasting. Huge potential in that space. But a bit like what we saw in the UK, where we started in quite a small pocket, Let's fast forward now to the next slide and see what the world looks like today. So the reality is that what started off as 1 or 2, or if not 4 or 5 really simple use cases has very quickly expanded. So we still have the story of account management type use cases with a broader suite. We still start to see payment initiation and lending, but much more SME-based services, and also some premium and platform services. A lot of the things that are emerging across Europe now lend themselves to the next wave, particularly when we think about next gen PSD2, starting to explore the concept of open finance specifications. So again, a much deeper, broader set of use cases starting to emerge. So when we think about those, who's adopting them? So if we pop to the next slide, what we can see is a broad mix across the world. I think the common ones, which won't surprise you, will always still be in the account management space, but people are looking at them very differently. It's not just about just providing you an aggregate picture of your accounts now. It's actually, what can I do with that data now I have it? And how can I engage you to give you a relevant experience? And ultimately then, how can I allow you to take action, which is the transactional element. And we're also starting to see some lending specific services, as well as some early other services, particularly around platforms. So again, following suit with that global picture, the use cases and their value exchanges and those new elements are also equally emerging, giving us an opportunity as organizations to learn from those markets and see how we can take advantage. If we pop to the next slide. This is an example of a payment journey from one of Mastercard's products, which is the Open Banking Connect product. I won't dwell too much on this, but very simply, we have a number of clients who use this as a means for offering a customer to pay their credit card bill. So again, using that payment initiation capability, you can use the open banking rails to ultimately then allow your customer to make a simple account-to-account payment. And this is really what that journey is describing, from you as a consumer being in the merchant app, choosing the bank that you would like to choose as part of the part of the payment journey, and then literally flowing all the way through until we get to the next slide, where ultimately then you get confirmation of payment and taken back to the merchant. Massive savings for the merchant in terms of cost, but also another means of payment for the consumer. So again, taking advantage of that open banking payment experience. If we go to the next slide, what I wanted to show as well is obviously that a lot of these slides you've seen to date have been a global view or a UK view. I thought, given the audience and the topic, it's good to get a local view. So if we think about open banking in the context of LAC, and we think about the Brazilian market, particularly with the launch of the new payment rails there, Recarga Pay is one of the emerging fintechs in this space. Really interesting to look at, tapping into the new payment rails and payment infrastructure in Brazil to allow sort of microloans, replenishing payment plans, sending, receiving payments. So, and open banking is a key component of their roadmap. I can imagine they're probably going to use the account-to-account payments as a means then to accelerate your payment journey and give you alternative views, but also the account information and possibly links into wealth as well. Given the extra data in that market will be quite compelling. So again, giving you that 360 view as a consumer on the go on your mobile device. I dare say it, you're lending yourself almost then to almost the world of super apps. Very similar to the WeChats of this world. So again, one to watch. But the next slide is probably one of the most interesting things that happened more recently. In the early days of open banking, particularly when we were talking to executives in my previous roles, we always told the scare story that the big technology giants would eventually come. Mainly because we knew at the time that it wasn't really about doing banking, it was probably more about selling more phones, or it was probably just more about having more consumer engagement on the services that touch the customer so they can own the whole journey. So we haven't really seen much over the last couple of years other than noises and some early stage movements. This was quite significant. So a week or so ago, if not a bit longer, Credit Kudos were acquired by Apple, which basically allows them now to start ramping up into that payment space using open banking data, particularly for loan applications and credit decisioning, which is a significant move. And if you think about all the journeys and the ecosystems that we are connected when we use our devices, this very much now starts to lend itself to financial enablement and embedded finance, where those financial open banking components become part of existing journeys and ultimately helping the consumer achieve their outcome. And again, when we talk about the FinConecta partnership a bit later, hopefully some of this will come to life in terms of that embedded finance and using those capabilities to bring some of this to life. If we pop to the next slide. So we said the thing, why should you care? So we've given you the story of Apple, we've given you the story of Brazil, but the reality is, does this really bring challenges to you as an incumbent or an existing organization? And the reality is yes. There's always this balance to be played between opportunity and threat and disintermediation. I think we should all be aware that disintermediation is real and it is possible to happen from a number of factors and a number of places. So clearly it can come from our competition as financial services industries, because ultimately our competitors will be consuming our APIs. Secondly, it's about your adjacent competition. So it's about your competitors who are consuming your APIs. Ultimately, then we've talked about the digital giants who ultimately want those same APIs to expand their journeys. And finally, it's about the neobanks, the quick startups who have that nimble ability to be faster than you, to ultimately bring all that to life. If we pop to the next slide. So we've talked a little bit about the background, we've talked a little bit about the use cases, but I think an area that's often forgotten when we think about open banking is, I think a lot of people concern themselves with trying to figure out what the right proposition is and spend quite a lot of time spinning wheels thinking about, well, what product should we launch? How should we launch it? When actually, sometimes a good place to start is accelerating your own digital transformation. So how can you use open banking to improve your customer journeys or your business processes? So if we pop to the next slide, what we start to see is organizations are at the sort of different stages of their digital journey. It's almost like they're going through a digital continuum. We often meet organizations that are at the start of their digital journey, where they're shaping their digital strategies and thinking about their early stage transformation, which is very much about digitizing their processes and journeys. We might meet people who are halfway through, who are now some way down the track and are now starting to think about early stage digital products. And we occasionally, in our sort of innovation hat, see the people who are now starting to explore the Web 3.0 world and some of the more, should we say, interesting propositions. But ultimately, open banking can become an enabler for digital transformation in certain areas. And if we pop to the next slide, we can start to see that I was involved in a branch transformation many years ago. And I think I still believe that open banking has a significant role to play, particularly when we think about digital technologies delivered with a human touch. So being able to have that conversation with someone in a branch with an aggregated view of all of their data to maybe help them with their mortgages and affordability assessment, or even just to help them give advice and guidance about their account in an aggregated view, I think is incredibly powerful. I think open banking brings a lot to the table to help improve that customer engagement, helping the bank in a way move away from transactional banking to relationship banking. If we pop to the next slide. The other area, and I did touch on it in the use cases, is how do we use open banking to improve our onboarding processes or some of our KYC processes? If we can attract new customers because now we know more data about you, I've got my open banking data about you integrated with credit reference data, agency data, suddenly I've got a much broader picture. And who's to say I couldn't get social and economic data about you as well, particularly useful with people with light credit files. So all of a sudden, I can accelerate my onboarding, but also I can mitigate risk because now I have more data about you. So ultimately, the message here is I've got now all this data available to me. How can I use it to my benefit to either rethink how I look at risk, or how can I accelerate my onboarding times for a consumer? All of these things start to suddenly change the way that we think about our customer journeys, as well as the way we think about product. If you pop to the next slide. So all being said, how do we participate and win in this new economy? So if we pop to the next slide. And I think this is kind of the tee up to what we're going to talk a little bit today. One of the interesting things that's emerged over the last probably 24 months, if not a bit longer, is this concept of bank as a service, which is realistically a natural evolution of open banking. In some respects, it's almost a key accelerator for it. And some would argue even open banking itself is bank as a service. So ultimately, what was interesting is for the first time, banks themselves, particularly if they had capability that was a USP or something very unique to the market, could offer that out to organizations as a product or as a service for them to very quickly launch their financial ambitions or embed finance into their existing journeys to help them without actually having to do the work and the build work themselves. And there are examples of that. If we pop to the next slide, we'll come on to some examples next, but I think it's important to also look at the size of the prize. Albeit a new industry, we're predicting industry analysts are predicting by 2030, this is a $7 trillion industry, which is incredibly significant if you think about how early this is, with around about a 230 billion revenue by 2025. So embedded finance, we think, is what's going to take off first. And I think a lot of you, obviously people on LinkedIn and people have seen the news and insights, won't be surprised by that opinion. And that will span from debit cards, banking, credit, loans, asset management. But ultimately, that will give organizations a vehicle to very quickly spin up financial products and embed them into their journeys, or equally give them the opportunity to appear in somebody else's journey. Or even better, can you actually orchestrate an entire journey and be the Uber or someone of the equivalent of your own industry? So an example in the next slide is something pretty much in the public domain. That's why we're talking about it, is the IKEA relationship with Acano Bank. So they have a percentage stake, around 49% in Acano, but ultimately that starts to fulfill their ambitions around bringing financial services to their customers. So again, it's about completing the journey. So being able to bring all of those things weave together as one seamless experience for the customer, whilst also not having to build it themselves, all of a sudden it moves IKEA away from manufacturing technology to assembly. That plug and play model that is often talked about. Easier said than done, but the capability is there. We pop to the next slide. So realistically, what I want to leave you with is, and I think, for me, I think the exciting part of all of this, having been in it from the early stages to where we see it today, when we even think about open finance and open data, we're really just scratching the surface. What we're going to show you today is effectively that transition that we see taking place, and how that assembly model and that speed to market is going to help organizations jumpstart their open banking aspirations, but also allow them to start exploring new products, accessing new ecosystems without the need to do a lot of that legwork and build work themselves. If you pop to the next slide. And that leads me to say thank you very much. So hopefully you took something out of that, and hopefully you will compete and not just comply. And I'll hand you back to Jorge now, who will do a bit of a deeper dive into some of the use cases and some of the power behind the platform.
Thank you, Michael. That was an amazing presentation. I know there's many questions from the people participating through LinkedIn. So if you guys have any questions, you can add them in the chat, and we'll be more than happy to cover that. As you can see, Michael is an expert on open banking, banking as a service. And the idea here is that anyone that wants to use this new concept, so the technology can connect with Mastercard through Michael or the team in Mastercard to be able to use the platform in the way on the use cases that Michael just presented. So thank you for that, Michael. And now we're going to move to the use cases that we have been able to build with the platform itself. And so this is not just concepts, but this is more on the opportunities that we see happening through the marketplace and specific use cases that are already happening through the platform. What you see and what you're going to see in the diagram about the platform and the opportunities, you clearly see that there's two ways to manage these opportunities through the platform itself. One is integrating solutions that are coming from the marketplace itself of different fintech solutions that are integrated into the platform, where the bank can integrate and use those services. And the other alternative is, as Michael was sharing, is banking as a service and a way of monetizing what the bank has to offer today, which is basically launching their own developer portal by which the financial institution doesn't have to have APIs, doesn't have to have a developer portal. Everything comes through the platform. So the platform gives you the APIs to expose, gives you the developer portal that you can use to be able to create those new use cases and generate new revenue streams for the financial institution itself. So the first case that we're going to talk about is an amazing institution in the Dominican Republic. It's called FIOGAR. And what they have done is they have used the platform to integrate with different players, different solution providers, different fintechs. And with that, they launched a solution in the market called Reset, which is basically a digital bank. This was built and created based on the integrations that they had through the platform itself and leveraging the capabilities that the solutions that you see down on the page were able to put together this amazing new digital bank in the Dominican Republic. So the other thing that they did is through the platform as well, they launched their own developer portal through which they're offering services to different fintechs that they want to participate in the DR market. So basically the digital wallet or neobank that FIOGAR launched, it looks like you see here on the right. And then the different services that they provide is P2P, payments, transfers, deposit, withdrawals, which is basically all the different needs that anyone would potentially use in a digital wallet. The developer portal looks like the one you see here, that they didn't have to build it. Everything was done through the platform itself. The other case we have for you today is a bank in Tanzania called INM. So INM, what they did was basically to connect through the platform and being able to create a new way of serving clients without having to have physical branches. What they have now is people with tablets that they can go anywhere in the region where they operate and provide all the services that they will have in a branch itself. So they have minimized the cost of serving clients through a digital channel with a combination of what is a digital branch. When we think of how they were able to create that, it's basically digitizing a flow where the client is served through this. It's the digital branch provided by Bank Genie, that in the process itself needed to have some digitization of the processes that was done by a solution called Taylor that was able to create all this flow that allows INM to have a service that it doesn't require to have physical branches where they used to have physical branches in the country. The last case that we have, I think it's one before the last, is the ability to create an app store for the financial institution. This is a financial institution that wants to offer the services that fintechs provide in their own marketplace. It could be created by just connecting the bank to the platform, and then that platform will allow to pull solutions from a marketplace that can allow them to build their own app store, if you will, for the financial institution. Together with that, another interesting case is a super app. There's a lot conversation about super apps in the world, especially if this means providing new financial services. And again, a super app that can offer a digital onboarding, that can offer a payments, financial services from insurance, investments, lending, and all of that can be easily created through the platform that we're talking today. Open banking platform. You can easily integrate multiple services through it and then launch a front end, which would be a super app to be able to provide services to the client that anyone can do. Anyone that wants to provide financial services. This could be a retailer. This could be a financial group that has solutions on the insurance space, on the investment space, and being able to put all of that together in one single app. Buy now, pay later it's part of an ecosystem that everyone's talking about it, and that is totally needed to expand the possibilities of new ways of buying, and that again can be created just by leveraging what we have within the marketplace, which is solutions that provide buy now, pay later. So a financial institution that wants to launch the service, by connecting to the platform, they find the exact fintech that can provide the service for their market, and then being able to quickly launch that service for their clients and new prospects. A success story that will be told by one of our guests, which is Graham from Central America. I think he sits today in Nicaragua. They just launched this solution a few days ago, so it will be great to hear from them what they have done in the platform, and also how they're going to use this platform to create a much broader financial services ecosystem through La FICE. So with that, I'm going to let Graham take it over, and thank you, everyone, and then we'll wait for your questions.
Thank you, Jorge. Great presentation, Mike. So we are Banco La FICE, and we want to talk about our integration services that Jorge mentioned. We launched our developer portal last month, but we've been providing open banking as a services for fintechs and corporations for the last couple of years. And I want to talk about a little bit about our experience doing this. I think Michael did a great job explaining what open banking is. I wish I would have seen this presentation maybe 2 years ago, but it's a very clear way of explaining how this works and how this can help you create value for your organization. So this is our mission statement, but what we like to highlight in our mission statement in La FICE, it's that we provide solutions to our customers, not just products or services, just a whole group of solutions tailor-made to our customers' needs. And we know the local markets because we are present in all the Central American countries. We have regional presence, and we characterize by innovation, efficiency, and excellence in service. As I mentioned before, we work in Central America. We have worked in Central America for the last 35 years. We have banks in Panama, Costa Rica, Nicaragua, Honduras, and Dominican Republic. But we have presence in 11 countries in Latin America and Spain. We have more than 4,000 employees globally, more than 200 branch offices, and almost 1 million customers in the last 30 days, satisfied customers in the last 30 days. So I'm going to apologize again for having my slides in Spanish. But what problem are we trying to solve? What's the opportunity we saw that we could accomplish providing banking as a service solution? So in the last maybe 3 or 4 years, we have talked to a lot of startups and fintech companies and they all had the same problem. They create an app or a digital platform, and what banks and financial institutions could offer to them, it's a mean for their customers to register their credit card on their app, and then the bank will provide a card processing, and they would deposit the transaction money at the end of the day in their bank account. So this is what is available today with most of the players in the financial services market in Central America today. But the startup or the fintech, they have other problems that need to be solved. The first one, if let's say they are trying to start an Uber company, right? And like an Uber service. They're going to have drivers and they're going to have passengers, right? The passengers can register the credit card so they can pay for the service. But the app, they have to pay to the drivers for the service they are providing to the customer, right? In order for the app to pay the driver in countries where 80% of people don't have a bank account, and this becomes a problem because the driver now has to come to the bank, to the physical branch of the bank, and he has to open a bank account, then go back to the app service and provide the bank account. So the app can deposit their payment maybe every week. And here, this creates another problem. someone in operations of the in the app, they're going to have to consolidate all the payments they have to do to the drivers, and they're going to have to manually perform these payments either through an online platform or files interchange with the bank, or any other FTP, whatever the app is using with their financial institution to load all these transactions and pay the drivers. Right? So this is what's available in the market today. And how do we think we can create a better experience for these apps and fintechs and ecosystems, and how we can help them to create value with their platforms through our services. So our proposal is it's very, very simple. We should replace all of these, but with our banking as a service services, or our API. So now the app will have one API to connect to our bank, and they're going to be able just to process credit cards and emit tokens for the transactions and everything they've been doing with the bank for the last 20 years. And now we can add additional services they can provide to their customers, like opening bank accounts or prepaid credit cards, and automate their treasury processes or operational processes in the back end of their app. So now they can create value to their drivers, saying you give a ride right now, and we can pay you and deposit to your bank account once your ride is finished. And all is done using services, machine to machine, no human intervention required. And now that they have access to our API, we can give them access to other services they do not have right now. We have access to more than 700 public services, public and private services, like water bills or cell phone recharge, cell phone payments. We have available in our API they can use and integrate to their apps. We have international money sending, like remittances, available to them. They can send remittances from one country to another using our services through their app, and local bank transfers in the same bank, in the same Lafise bank, regional bank transfer in Bancos Lafise, or they can do money transfers between other banks in the financial systems in the countries where we operate as banks. So this is what we call our open banking solution. And if we go to Wikipedia, I think Michael did a great job explaining this. Wikipedia defines it as using APIs to enable third-party developers to build applications and services around financial institutions. We like the second definition better, where the bank turns into a financial services platform as a service. No, not anymore a service, financial services and products provider, but a financial services provider as a service. So we call these, we tell our customers to use our services to build theirs. And as Michael mentioned, and I like to tell my customers, we want to be the Goldman Sachs for your Apple Card. So if you have a great idea, we can help you integrate that idea into the financial services market. So our platforms allow our allies to develop and implement financial products and services with the capacity to reach thousands of customers we are not reaching right now. So we've seen the fintech revolution. We've seen how they're able to reach hundreds of thousands of customers in months. And this is something we have not been able to do. And if you look at statistics for Central America, most of the country, 80% of the population, do not have access to a bank account. So these demonstrates we are not doing a good job as a bank trying to convert people to using bank accounts and stop using money. So this is our vision. We don't want to compete with the fintechs. We want to help them integrate into the financial markets. So how we started creating, as Michael said, and I think he described perfectly the path we followed, and I thought we were being innovative, but I think this is like the regular path every other bank follows. We started creating an API to integrate to the bank. We started a digital transformation 4 years ago. So we needed a quick way to integrate new services into our platform. So we developed these open banking platforms so we could integrate our services and our innovation strategy into the bank. So we looked it up and we saw the standard, the PSD2 standard, and we started creating our API to integrate our services into the bank. So Leah, our chatbot, integrates through open banking, and the call center, we use Salesforce as a call center backend. Salesforce integrates to the banking core through the open banking API. Also, lafice.com is our web portal where users can open bank accounts and request credit cards and a bunch of other services. And they use we have forms there that integrate through open banking to our banking core. So they can do things like open bank accounts, activate credit cards, create a user profile, open a bank account, and others. And when the pandemic started, we saw the opportunity with our corporate customers. It's important to note here that Lafice was started as a corporate bank, and we've been going into the retail banking for the last 10 or 15 years, I think. So a bunch of our corporate customers, they started saying, "Hey, we're working from home, and we can't stop our growth because our employees cannot go to the bank. What can we do?" So we developed what we had already a security layer that allowed us to give permissions on the customer level, on the product level, and on the API endpoint level. So we can allow our company, our corporate customers, to have access through our APIs to their customers as an enterprise, or their employees' customers to the products they pay their salary on, to certain endpoints depending on the customer. So an enterprise will have full access to all the APIs on their products, but will only have access to deposit money to their employees' banking product where they pay their salary to. Or they could activate their debit cards through their HR portal on their so they already asking for a lot of information on new employees, and if they have high rotation, as most of some of our corporate customers do in big factories. Let's say a t-shirt factory, they onboard around 600 people a month. So they now have integrated their HR platform using our APIs to our banking core, so they can onboard their new employees, and they can open their bank account, and they can we will send them the debit card, their employees debit card, and they can distribute this debit card through HR, instead of having someone filling a bunch of forms and bringing them back to the bank, and then the bank going back to sign the contract and all that. So this is one use case we've been using with our corporate customers for the last, I think, 2 or 3 years. But then we saw the opportunity to convert these corporate customer into what we call an ally. And this how do you become an ally, and what do we mean by ally? So you are a company or a fintech or a startup, right? And you have already built your digital platform, and what you want to do is you want to offer financial products and services to your customers, not through the bank, but through your digital platform, right? So let's say you are a supermarket. We have a success case with the supermarket, and pandemic started. They didn't have an online store. They created an online store in a record period of 3 months, and they started doing the e-commerce route. And then when they published the application, they realized 70% of their customers didn't have a way to pay through e-commerce. They were paying cash on delivery. So what we started doing there, we offer them the API, and they through the app. The first thing you have to do on their app, you download the supermarket app, and the first thing it asks you for is a credit card, same as Amazon, right? So the customer doesn't have a credit, debit, or prepaid card, and the supermarket tells them, "No worries, I can help you open your bank account, and I can give you a means to pay through our app and other apps, and we are going to give you our supermarket prepaid card." So they take a picture, a selfie, and they take a picture of their ID, national ID, and this travels to us through open banking. It comes to the banking core. We realize this person is someone that's already a customer of ours. We send them a consent request. We tell them, "Hey, this supermarket is trying to create a banking product, a prepaid credit card for you, and they want to administer this credit card in your name. Is this okay?" And the customer says, "Yes, of course. I'm trying to open a bank account in that supermarket." We reply with the answer, and they can give the feedback directly to the customer, not through us, but through their digital platform. And this has proven to be a success in other parts of the world, but in Central America, when we don't have many services and we are not as digitized as other parts in the world, we think this is pretty innovative and game changer. We have been working with at least, we're working with around 60 fintechs and big corporations that are trying to evolve to a digital platform in order to integrate and provide financial products and services to their customers through through their platforms. So this started in 3 layers, as we like to see it. The first one is internal. We created this API, and we started using it as an innovation gateway. This would allow us to create new solutions and integrate it into the banking core as fast as we can. So this was our first step, using the APIs to integrate our new and exciting products and services into the banking core. The next step was creating partnerships with companies that are already customers. This allowed us to test the service, to understand what their customers were doing with the service and what they wanted to do from now on. And the third step is making the APIs public, which is what we did last month. What we're trying to do is we're trying to get everyone to test our APIs and integrate into their solutions using the backbot and the sandbox. Anyone who has any programmer or developer who has access to our API is going to be able to test integrations into our banking core and try to distribute banking products and services through their new and exciting platform. And we want to have as many people as we can interested in our APIs and how they can use them to create new business models and create values to their customers. So this is our 3-step programs. It's a little more basic than Michael's, but I think it makes the point at the end. So what are we offering through there? We're offering, our offer is it's pretty simple. We're getting started with these. We have 4 groups of services. First one is identity as a service, as Michael mentioned. The first step to creating a new customer and through our platform is to make sure the customer is who he says he is. So this is somewhat easier to do in developed countries like the ones in the European Union or the United States, but in Central America we don't have centralized. We have centralized ID emissions, but not they do not have services we can consult to see to check the validity of the ID and run biometrics checks against the customer who wants to open a bank account. So we had to come up with creative ways to do this using our existing data in our databases and biometric data we already have about the customers, and we are able to provide this not only to the allies that want to open bank account to other new customers. We have been offering these identity verification as a service for other financial services that are trying to other companies that need to do identity verifications of their customers. We are very popular with local e-commerce sites that are trying to mitigate fraud, verifying the identity of the customers that are trying to buy products through their e-commerce stores. The next step, once we have verified the ID of the customer, we can emit instant bank account openings. This might sound irrelevant for people in more developed countries, but in Central America, this is something we are very proud of. We were the first ones in Panama to being able to open 100% digital bank account. That means you open your bank account through our website, and you don't have to come to the bank to sign a contract or anything. You just take a selfie and you take a photo of your ID, and we do all the checks. If you pass all the checks, then we give you a bank account. This bank account can have a debit card or either a digital debit card or a physical debit card. We would deliver to you in the next 3 days. Or we can do this through the ally, and the ally can deliver the card to you. The next group of products is everything that has to do. Both of them they rely on a local regulation that's based on a simplified bank account. They can hold up to $1,000 a month in deposits. And what we do is we try to lower the risk of in the product, not the customer. And the last group of products is the monetary transactions. We are able to we can provide our allies with APIs to move money between accounts to other banks in the financial services market and in the regions we operate, to send international transactions in the way of remittances, and or directly send money to our ATMs in Central America. So what are the advantages we offer? Quick and easy integration. We're based on an open standard, and our API is fully documented with use cases that our users can leverage on to create to build their solutions upon us. The white labeling of our APIs. If you use our APIs, the end customer doesn't need to know that you are opening a bank account on La Fice. It only needs to know you're getting a prepaid credit card on the app you're trying to open a credit card on. So as I said, again, we want to be the Goldman Sachs of all those Apple cards that are being created out there. And then this is something I like to emphasize here in Latin America. We are a zero bureaucracy entity. Once you use our APIs, we're not going to make your customer come to the bank to sign a contract or just to take a picture of them. We're not going to be we're never going to do that. So what are most of the things we're trying to do with our allies in the region? Well, firstly, I think wallets are a big success here. Not app as a wallet, but we've seen a lot of traditional businesses trying to go into the digital space, creating a new platform or new digital platform, and with a population of 80% not having access to a bank account, creating them, helping them create a virtual wallet, which is actually a bank account in our bank or a prepaid credit card in our bank. It's a huge success for them, or a huge success factor. They're creating a lot of value to their customers through our integration to us. Payment apps, these are pretty popular in Central America. You order something, and someone in a motorcycle comes with your food at lunch and delivers your food, and you pay through the app. Well, 40% of the payments we've seen in these apps are multi-million dollars a month in revenue apps. They pay in cash. So we're trying to close that gap and create prepaid cards for those customers, so they can go all digital in their platform instead of taking cash, which is a huge operation problem. And then micro financial services. There's a lot of companies that give micro loans, $1,000 or less, and what we are working with a lot of these institutions, so they can instead of giving cash to their customers, they can open a bank account once they have approved their loan, and they can deposit this loan into their bank account. On the plus side, they can use our banking platform as a payments method to repay the loan they just given these customers. So we look into three key components for a company to become an ally. First, we have to have automated and simplified the process they want to integrate. We have to have it automated, simplified, and integrated into the API. So if you come with a very difficult product which has a very labor-intensive process, we're not going to put it in the API. We're trying to have only automated and simplified processes integrated into the app. We're trying to reach. Our ally has to have the capacity to reach thousands of customers a month, not tens of customers. We're interested in allies that can bring to the table thousands of customers, hundreds of thousands of customers a month. And then the ally has to have the technical ability to integrate our solutions to build theirs. This is something we try to keep clear from the start. This is not a banking solution this is not either an e-commerce or e-banking platform. This is a set of services and APIs you can use to provide products and financial services through your digital platform. So we like to call this use our services to build yours. We recently launched our developer portals. You can reach it there, developer.lafisa.com. We have a bunch of use cases and the documentation for our APIs, and we are open and eager to hear about your story if you want to integrate your business to the financial markets in Central America. Thank you.
Thank you, Graham, for that excellent presentation, and you showed multiple use cases that can be built around the platform. So the platform allows you to integrate multiple players and on different sides of the business, and that can easily be done through FinTech as a service, which is the platform that we're using now to do all those different cases for financial institutions. So So with that, Graham, thank you so much. And we also have with us Miani from the Mastercard team that she wants to share some thoughts with all of you in LinkedIn.
Thank you
The floor
so
is
much.
yours.
Thank you so much, Jorge. And hello, everybody. Good afternoon, good morning, hopefully not good evening yet. So my name is Miani Skunken. I am Vice President of Innovation Ventures here in Mastercard. And I've had the privilege of working with Jorge from FinConecta for the last, Jorge, 9 months, give or
Yeah.
take. And I think, Graham, you put into perspective exactly why we're working as Mastercard with FinConecta and how powerful their platform is. So Mastercard is launching FinTech as a service. And we believe with this partnership, we'll be able to bring a platform, we'll be able to create a platform that really brings together and accelerates digital business worldwide, but more so allowing fintechs and financial institutions to establish mutually beneficial partnership and also keep innovating, because that's one thing where Mastercard thinks very high of, is working with our fintechs. Labs as Service works with innovation, and it is what we want to do. We want to bring financial institutions together with fintechs. So, and that's my sort of my story. With no further ado, I'd love to hear your questions. I see there's a few questions there already in the chat, so I'll work through them, gentlemen, and I'll find every now and again I'll throw in one of my own just to find out if you're still awake, and I want to make sure I pick your brains for as long as we have you. So I see there's questions around how can a fintech participate in the Mastercard ecosystem. Our details are going to be up at the end. Please feel free to get in contact. We are launching in Latin America first. It's a privilege for us. I think it's a market that is rich with innovation, and the fintech growth has been astronomical. So do get in contact if you want to participate in the fintech as a service platform, and it's from both sides, whether that is a financial institute or whether that is on a fintech side. Our door is always open. The same with the next question. So how can a financial institute launch something similar? Again, get in contact. We'll be happy to talk. Now, Graham, here's an interesting one for you, and you can share as much as how much you want and how much you don't. But what is your business model that you've got for your use cases? What do you, at a high level, what is your business model around your platform?
Well, that's an interesting one. We've been doing these for 2 years, and every time a fintech or a corporation comes to us with the need to integrate to our API, we create a business case for each an individual customer. And what we're trying to do, this is not the easiest to do, but what we're trying to do is we want to integrate with the right partner. We just don't want to open the door to everyone. We want to make sure we're creating an impact with this.
Yeah.
This is a very traditional market, Central America, especially for financial services. So we want to make sure we have the right partner, and we want to make sure we're both happy. We don't want to charge you for a service and then leave no business to you. What we're trying to do, most cases, is try to do some kind of revenue share where we open up our costs and they can open up their costs, and we can do revenue sharing between both parties. Some other cases, we do a charge per card or per bank account or per API consumption.
Okay. Perfect. So you've got a sort of a blended model where you've got the revenue share or then just a pure SaaS.
Yeah.
Okay. No, that makes sense. I do assume it's a little bit on a case-to-case basis, depending on the specific use case. But overall, that's the business model. Here's an interesting one. What are the opportunities Mastercard sees in LAC? So I'll take the first few seconds of that, and then Mike, I know you've got some thoughts on that as well. If you think about the LAC market, the influence of fintechs has been staggering, globally, and up till couple of years ago, I dare to say Latin America sort of lagged behind, but it's really until now. In the last year, we've seen exponential growth in fintech activity, and the opportunities that is in LAC between, to your point, Graham, that you talked about a lot is, you're underbanked, you're underserved. The opportunity to bring digital solutions to them, I think Latin America is ripe at this point. There is so much happening, and that's why, from my perspective, as looking after the venture side, we chose Latin America from to launch our fintech as a service platform with FinConecta. Mike, can I pick your brain there a little bit as well?
So yes, you're absolutely right, and I think the only thing to mention, which I didn't even mention and I forgot, which is on me, is the interesting thing that happens or is happening within the LAC region is also the emergence of open insurance. So there is an open insurance initiative in 2022. So if you combine that with the concept of open banking and the expanded data set, you now all of a sudden have the true concept of open finance.
Exactly.
And if you take that a step further and you put all of this on top of the PIX network, all of a sudden now it gets a really interesting story around being able to now start to think about financial inclusion, making finance available to everybody, accelerating onboarding because you no longer need cards to make payments. Anybody can own a mobile payment and without having to have a card. So the onboarding journey is that much quicker. From a Mastercard perspective, it gives us the opportunity to bring digital platforms and digital capability for payments to the market more easily. From a consumer standpoint, you have much more choice. But I think, as we talked about in the overview, that light credit file and dealing with people that you perhaps wouldn't have been able to deal with before because you don't have that view of them, you have that perspective. But I still stand by the small to medium business example. And I think Graham's example is also brilliant around identity as a service. I think will be a major play in this market, particularly as identity is one of the stumbling blocks from being able to get an account. So if you solve that problem, and with all of this aggregated view of insurance and data, you can imagine banks and organizations bringing those 360 dashboards for small to medium business where they can manage their accounts receivables, they can manage their liquidity forecasting management, and even do peer-to-peer lending and even embedding buy now, pay later capability. So you'd end up with a small to medium business as a 360 degree of your business, but also then from a consumer side of onboarding people to your business, the path to onboarding will be more quicker and you'll probably have a bigger customer base and a bigger, a more, should I say, more tolerant view of risk because now you have more data to back it up.
Okay. No, I agree. No, that's great. Thanks, Amal. Next question. I see as part of the Mastercard Startup Path, how can we join? So another hooray. I'm starting to pronounce the name right for the first time, I think. So as part of Start Path, you can just reach out. Our details will be on screen at the end. But I know Eduardo Vergara runs Start Path within Latin America, so you can also contact us via your Start Path contact. But you can reach out at the end. Our details will be up, and you can just reach out to us directly. Okay. So here's an interesting one because, all right, I'll leave this one to you. So which open banking platform does Lafisa use for their services use, guys?
Well, and I think there's another one that asked which one is the one that IMM is using.
Oh, yes, in Tanzania as well.
And and that would be FinConecta, which is the platform that we're using for fintech as a service.
Yeah, so, one of the things I would like to mention about that is I've seen the question ahead. I don't know if I'm getting ahead of myself, but the thing is, if you integrate into a platform like FinConecta, what you have is you can give your customers access to the APIs from the start, even if you have not created the integration or the necessary backend to integrate in the back. And this is a long-term strategy, right? So once you start conversations with a startup or with a company that wants to integrate to your APIs, the first thing you can do is you give them access to the developer portal and the API, and they can start integrating and getting in love with your solution, right? And in the back, you start working on the contracts and all the legal fun things you have to do to integrate to get that app into the production.
No, and you're 100% right. I think the fact that there's that sandbox and that bank bot, which gives you those normalized APIs to integrate against, just means you accelerate that integration and time to market quite dramatically.
And you get a lot of data on what your customers are trying to do with that API. Maybe things you haven't seen before. They were not in your roadmap to develop, and you start seeing what is this guy doing, what are these guys doing, and why haven't I seen that before?
I think that's important to mention as well. We've talked a lot about APIs today, but what we haven't really talked about is the data that's derived from those and the value that you're going to start getting from them by having those assembled APIs in your ecosystem. That will open the door to new opportunities that you haven't seen because of behavior, or even APIs that are underperforming, or even ones that you didn't think were market leading but actually generating the majority of your revenue. Or can you just start preempting your customers' behavior? So you start getting a richer data set off the APIs, and it's not just about delivering the service then.
No, that's a good point. That's a good point. Data is the big one. You see, there's a question there, and I might be having a blonde moment. It says, would a Mastercard connectivity substitute a direct FinConecta integration for a financial institution? So the partnership is with FinConecta and Mastercard. The product is called FinTech as a Service. So it is an integration into a platform, but it is fundamentally, it is a FinConecta platform, but it is in partnership with Mastercard. So it's open to our customers, it's open to our FinTechs from that perspective. So it's one integration into a FinConecta platform. And it's a single integration. I want to be, in 2 Graham's point, as a FinTech, you can, beforehand, and the financial institute can go have a look, and you can, go play in the sandbox and all of that while we do the beautiful admin details. But once the financial institute integrate, it is a single integration, and you can work with multiple FinTechs. It's not a integration for every FinTech. So it's once that you have the effort of getting, and we work with you on that, we assist within that, but it's a single integration for a financial institute to really open up the door to multiple FinTech solutions.
I think that's a great point. This is a zero maintenance solution for us, for our technical side. On the in the way that we can have our sales people talking to a lot of fintechs, and what they do at the end of the day is they open a developer portal account and they give them access to the documentation, and they can serve themselves. So this opens up a broad market that we were not able to service in the years before.
That's true. I see there's another question. Before that, I just want to ask another question here. We talk about the opportunities, and it's important because I think the opportunities, especially in Latin America, is really, really ripe. But if I had to ask each of you, well, what would you see as, the threats? What would be those little pitfalls that you need to watch out for? Because it's great to talk about opportunities, but there's things we need to take into account, and we all have different perspectives. So what would you say would be those threats / little pitfalls that we probably need to just make sure we tell the people about as well? Am I putting you on the spot here? So
I'll go first.
Okay, go for it.
I think so. We've talked about in the deck, we talked about the competition. I think that's understood. I think if you look at Graham's example, is walk before you can run. I think there's a path of least resistance story that needs to be considered when it comes to open banking. I think the pitfall is the mindset of build it and they will come. I think I think these sorts of platforms and the partnership will give people the ability to test and learn rapidly. and work with their customers to actually shape those APIs. I think the danger with looking at APIs is you treat them as a piece of technology.
Yeah.
You must treat them as actual products.
Yeah.
Where they have the same rigor as if you were launching a current account or anything else. You need the same wrapper, but at the same time, the benefit of the API gives you the ability then to rapidly test and learn with your customer. And I think also another threat people underestimate is the power of their brand. So they often think about and worry about the competition as taking over and being into their space. But if your brand is very powerful in your market and is seen as a community connector, that can be actually an advantage. So if you neglect that brand, that can be a threat. If you try and approach this as a piece of technology, I think that's also a threat. And also if you try and take on too much too soon, equally a threat. So I think the overarching message for me is path of least resistance, test and learn, don't try and be perfect. Launch little things and often, and don't underestimate the power of your brand.
Yeah.
And I think just
Go for it. No, go for it.
I'm just gonna say that, just complimenting of what Mike said. I think the biggest risk is not to do anything, right? To keep looking at what others are doing and trying to be perfect and trying to build it on your own. I think the benefit of having a powerful tool like FinTech as a Service from Mastercard is that you can test and learn very quickly. You just have to take the decision to do it, because as Graham mentioned, they've been working on it for quite some time, and they're pivoting and trying to find new business models that will work. So I think this is the moment to not to try to be perfect, is to start soon and to learn and use tools that are out there. Don't try to build everything yourself, because you will never get there. There's the risk of time to market today is huge. So the sooner you start, the better you will be, and the sooner you will find the right business model for your institution and for your clients.
I think that's a very good point, Jorge, is, don't start by building it from scratch. By the time you've done that, and Mike, I can see the tears in your eyes when I start talking about building them, because you've got all the scars on your back there, and that's why I know I can say this. With all the technology and all the partners and all the opportunities out there, there's this concept of assembling instead of building from scratch, because by the time you're at the point where you're ready to launch, the market has moved on. And the markets are moving so quickly these days, with a lot of factors that influences that. But you'll never get ahead to be ahead of the game.
I'd also add Miani as well. The only thing I would add as well, just to build on that, which I totally agree with, and yes, the scars are there. I think the only thing is don't neglect what you're good at and double down on that. There's a danger and a real pitfall that you can try and do everything, back to Jorge's point, and miss the actual things that are your USP. So for the things that you're identifying, the things that you're not good at and as a utility, look to assemble that from the market. The things that you're really good at, you either build those out yourselves or you add to them through the FinConecta platform. And then we come back to that bank as a service opportunity then. Can you leverage that capability because you do credit decisioning better than anybody else, for example? Could that be a service then you offer to someone else? So again, don't lose sight of the things that's again a pitfall. People often don't realize some of the things that they do that they're really good at doing better than anybody else. And they should be things they should be really focusing on rather than the utility side of things.
Graham, you want to maybe share what was your biggest pitfall, or what's the biggest scar on your back?
Well, I think you guys have covered well. I think starting with a suite of services already made and give access to the customers early, it's a thing we should have done since the beginning. We opted 4 years ago to build our own solution, and this came with a couple of setbacks, as personalizing the APIs too much and going away from the standard. And when you integrate into a solution like FinConecta, you buy the standard, and by that you can, as we can offer the solution to many fintechs can integrate into our solutions in a standard way. which means
Yeah.
if they already integrate to another bank, it's going to be easier to integrate to us if we are abiding to the standard. And
Yeah.
I think that's the biggest lesson we learn. We
Mhm.
don't bring value to the allied with the API. What we
Mhm.
bring to the table, it's the banking services,
Yeah.
the bank accounts, the credit cards, the debit cards, the processes that it makes us able to give those products and services to their customers, not the API. That's not our forte. That's not
Mm.
what we want to do. What we want to do is
Exactly.
open the bank accounts. Yeah.
Yeah. Yeah. No, that's a very good answer, and to you, and that's exactly to Mike's point. You stuck to what you're good at. You stuck to what you
Yes.
wanted to do. Used FinConecta to enable that for you and the platform to work with you to deliver that. But you stuck to what you're good at, and that's creating those bank accounts and reaching people. Okay. If I'm not mistaken, we're coming close to time now, so we might squeeze in a last few, and I'm going to time you. I'm going to give all of you 5 seconds. I won't time you, but maybe a last word from each of you, and then we can sign off. Mike, your last 2 cents.
My last 2 cents. I
Your
think
last cent.
hopefully today you've taken from this that competing is a huge opportunity. And I would just double down what everybody said is, my advice for everybody looking to get in this space is don't wait, jump in, test and learn. Don't build it yourself. And partner where it makes sense to do so. Use platforms like we're talking about today, hopefully ours, and start your open banking journey as soon as you can. That would be my advice.
Perfect. I do concur. So, Jorge, anything else you
Well,
want to add to that?
I think the opportunities out there for all of you to actually enhance what you do and look for new ways of creating new revenue opportunities. And you don't need to build anything for that. You just have to define the model, as Grant have mentioned, to just the stick of with what you're good at, and leave the rest to the platform. Ideally, the Mastercard platform, as you guys said. And I want to thank the three of you for participating with me, and also to everyone that is watching us. And it's been a pleasure, and looking forward to do this again.
No problem. Graham, anything to add?
Yeah, I think thank you for starters for having me. It was a pleasure. As you might know now, I love talking about open bankings and open. So feel free to invite me whenever you want.
Okay.
And the thing is, well, what I wanted to add at the end is, if you're trying to come into the Central American market and trying to integrate your solution into the financial services market, we're open to hear your solution and help you out to do that. So feel free to contact us, developer.lafice.com. And as Jorge said, there's a lot more work to do than the technical side. The technical side, it's taken care of now. We have to do a lot of things in the back to make this your product go to market, contracts and business cases and business models and everything. We can help you with that, and FinConecta can help you with the technical part.
Okay, I think we are officially spot on. See, listen, everybody who's listening, I just want to thank you all, and we look forward to hearing from you. To the three gentlemen here, thank you kindly. We will do this again. Okay,
All
thank
right.
you.
Thank you. Bye.
Thank you.
Bye, 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 everybody.